Hello traders, Gary Wagner here, just after 12 noon in Honolulu, after 5 o'clock in New York on Tuesday, first day of March 2022, and this is the daily report for gold and silver. Actions by the Russian military have escalated to a point where they are now targeting citizens, and a 17-mile-long convoy of military equipment and troops is inching closer to the capital city. That took gold to new highs that we haven't seen in about a year. Gold traded to a high of $1,952.60 and has settled just below that, with April futures currently fixed at $1,942.80, a net increase of about $42. We did send out a trade alert to raise our stops. We'll talk about that when we pull up some technical studies. Strong gains in both gold and silver today occurred with dollar strength. The dollar gaining about 0.7% or 68 points, with the dollar index currently fixed at 97.355. Silver futures gained almost 4.5%, well over $1, a gain of $1.07, taking the most active March futures contract of silver to $25.45. This morning, I did send out a trade alert to raise our stops on our current long position. It seems a lot longer, but we entered that trade on Friday of last week, literally 3 trading days ago. We got in at 1893. Originally, our stop was below these lows here at $1,873. Today, we raised our stop to above our entry price, and our new stop is sitting at $1,907.60. The other thing that is exceptionally noteworthy on a technical basis are our 3 moving averages: the 50-day moving average in green, the 100-day in blue, and the longest term 200-day moving average as a dashed line in red. As you can see, the 100 recently crossed above the 200, putting gold's 3 moving averages in full bullish alignment, which is a technical indication or confirmation that the current rally has more upside potential in the days ahead. Obviously, my recommendation is to maintain your long position at 1893 and your stop at $1,907.60. In terms of where I believe gold could move to if it continues to rise, and what the current levels of resistance are that gold pricing will have to overcome, the first real level comes in at Thursday's high. That occurred at around $1,975.90. We are not too far off of that mark, with gold challenging $1,950 today. We are certainly within striking distance of that price point. With the interim forecast of gold challenging $1,975, if in fact gold continues to rise, we want to look at that area for a possible retracement, because we have seen this market move considerably higher since it hit these lows at 1777 and then broke above the critical resistance trend line drawn simply by looking at recent tops and carrying that angle forward. That being said, my longer-term forecast is that gold will challenge the all-time record high at 2,088, because the model that I'm presenting to you has a very, very conservative extension for the third wave that I believe we're in. According to Elliott Wave, the third wave, impulse wave, cannot be the shortest of any of the impulse waves, waves 1, 3, and 5. And typically the model that we'll use is a 1.618% extension of wave 1. And if we calculate extensions above a 1-to-1 relationship, the 1.236 extension would take gold to $2,122.80, and the 1.618 extension would take gold near $2,200 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.